of inventory management techniques. So in MAC3701, we are going to discuss the management of inventory using the economic order quantity and also the just-in-time. So we can discuss the just-in-time. Now, the just-in-time is just simply saying the inventory should be held at a minimum. Or we are simply saying that if the organization is going to be having any inventory, the inventory that they are holding is the inventory that is work in progress. So it is a Japanese technique that was invented or formulated by the Toyota company in Japan, where they say they are trying to avoid any inventory holding cost. So you'll be applying what we call the just in time. So the inventory that is only held is inventory that has been ordered by a customer and it is being manufactured so that the customer will come and collect it. So using just in time, the entity is going to be incurring minimum or no inventory holding cost. Then the second technique, which we are going to be discussing, is called the economic order quantity. So when we are looking at the economic order quantity, one thing to take note of with the EOQ, we say this is the optimal level of inventory. So one would ask now, what do we mean by the optimal level of what? Of inventory. So when we are looking at the optimal level of inventory, we are saying that it is the level of inventory where the inventory cost is kept to a minimum. Are we together? So the inventory cost is going to be kept at a minimum level. So which inventory costs are we going to be looking at when we are looking at the inventory cost? So the first cost of inventory, obviously, is the purchase cost. So the purchase cost, we obviously know the purchase cost is the cost of bringing the inventory to its present location and usage, of course. Then number two will be the inventory holding costs. So the inventory holding costs, from the past examinations, we have seen that UNISA will be looking at the inventory holding cost. We look at the direct holding costs. We'll be looking at the insurance on inventory that is being held. Are we together? We can look also at what we call the opportunity cost, or we can say the cost of capital. Now, what do we mean by the opportunity cost? So we are saying that if the entity is going to invest its money in inventory that is just lying there in the warehouse or in the supermarket, so that inventory is not bringing in cash to the organization because no one has bought it. So if the entity had invested in another investment, it could have received at least the minimum return. So the opportunity cost, we are simply saying it is the cost of taking another alternative. So the cost of holding inventory for an organization is the cost of capital, because if the investors put money in the organization, they expect a return. So the return that you're looking at is the minimum return. So if you buy your inventory, instead of you investing in another investment opportunity that can give a return to the investors. So we are saying that the holding cost includes the opportunity cost or the cost of capital, because the entity has chosen not to invest in another investment and it has chosen to invest in inventory. Did we understand that part? Who can repeat what I said to just make sure that I'm teaching the correct things? People understanding me. The opportunity cost. Who can help us? Any take? None. So it means that I wasn't teaching. Good people? All right. Then we come to number 3. The third one is the ordering cost. Are we together? So the third one is the ordering cost. So the ordering cost, these are costs that you incur in the purchases department when they are doing the order. Maybe the telephone calls that you are making with your suppliers. So that's your ordering cost. Remember what we were talking about. We are talking about the economic order quantity. So the economic order quantity is saying it is the optimal level of inventory. So when we are saying it is the optimal level of inventory, we are saying that it is the level of inventory that is going to be ordered from a supplier that is going to minimize the purchase cost, the holding cost, and the ordering cost. Are we together there? So we are saying we are minimizing the purchasing cost, the holding cost, and the ordering cost. So when we are looking at the economic order quantity, so we are saying that it is the level of inventory that the entity is supposed to order, and it will reduce or it will minimize the inventory cost. So how do we get that economic order quantity? So with your economic order quantity, the formula is just simply EOQ. It is 2 multiplied by the annual demand, or we can say usage, multiplied by the cost per order, divided by the holding cost per unit. Everything, it is a square root. Are we together? So it will be your 2 multiplied by annual demand, multiplied by the cost per order, divided by the holding cost per unit. Let's just analyze the formula that we have been given. So the first thing that we look at is the 2. So the 2 is just simply a constant. Are we together? We don't have to worry about the 2. You just know that it's a constant. Then when we are looking at the annual demand, so when we are looking at the annual demand, we are simply saying that this is the inventory that is going to be used by the entity. Are we together? So if you are given a weekly demand, you have to check how many days are there in a year, so that on your formula, you put annual demand. If you're given the demand per month, you multiply it by the number of what? Of months in a year. If you're given the demand per day, you multiply by the number of days that are there in a year. So that's what we mean by the annual demand. Then cost per order, this is the cost of ordering your inventory each time you order. Then the holding cost per unit, remember, don't forget your holding cost. We have your direct holding cost, you've got your insurance, you also have your opportunity cost. Are we together? Is there anyone with a question on the formula before we apply it? No one has a question?
Hi, sorry, Ngaban. Can you please just repeat that formula for me?
Okay.
Thank you.
All right. So the economic order quantity, we said it is the 2 times annual demand multiplied by the cost per order divided by the holding cost. So when you say repeat, I should explain each and every item, or you just want to see the formula?
I want you to explain each and every item, if that's okay.
Okay. So I said 2 is just a constant. So don't worry about it. It's always there. Né? Then the annual demand, this is the usage per annum. Please take note. So you see that the examiner can put the usage per day. For when you are calculating your economic order quantity, make sure that you apply the usage per annum. Are we together? So meaning that if you're given the daily demand or the daily usage, you have to multiply by the number of days that are there in a year for that organization. Then the cost, or if you're given per month, you multiply by the number of months. Given per week, you multiply by the number of what? Of weeks. Then you divide by the holding cost per unit. Remember the holding cost, we said it is the direct holding cost, it is the insurance, and the opportunity cost or the cost of capital. Now, I want us to look at a question that we are going to apply. So the study guide now is just simply showing you that in MAC 2601, we used to say the formula is 2 multiplied by the annual usage, which is your demand, multiplied by C. Are we together? So this is just what you have been doing in the past. So meaning that if you decided to forget, we will allow you also to attend your MAC 2601 for you to remember. You will take note now, we are just doing everything at a high level, assuming that you have been doing your MAC 2601 in the past. But basically, the formula that I gave you, you just know that it is 2 multiplied by annual demand, multiplied by the cost per order, all over the holding cost per unit. Don't forget the holding cost. You will be having your direct holding cost, you have your insurance, and also you can have the cost of capital. But it doesn't mean that if the question does not give you one thing, insurance or the cost of capital, your life has ended. You just apply what you have been given. Right, so what we want to look at now, good people, is this question. Palm Limited is a supplier of woodworking tools. One of its products is a sanding machine. It is selling at 4,900. The company sells on average approximately 20 sanding machines per week. Do you see where the catch is? It is 20 sanding machines per week. Our formula for economic order quantity, we said it is annual demand altogether. So now it is 20 sanding machines per week. So what we need to do now is to check how many weeks are there in a year. Are we together? Sales took place evenly throughout the year, which consists of 50 weeks. So life is good for us now. For us to get our annual demand, we can easily say 20 multiplied by 50, which gives us 1,000. Are we together? So that is our annual demand. The company purchases the sanding machines at a cost of 3,430 each, and the cost to place an order amounts to 300, and orders are executed within 5 weeks. Please take note, when they are saying that the orders are executed within 5 weeks, what it simply means is this is the time between the ordering and the time they will receive. So what we can do, we can simply, sometimes they can call it the lead time. So if you get this word, the lead time, you just know that it is the time between ordering and the receiving of the goods. Are we together? The direct inventory holding costs is 35 Rand per unit. Insurance on sanding machines is 10% of the unit cost per year. The company implemented the economic order quantity type to manage its inventory. The current required after-tax cost or return on capital is 4% per annum. Right, so our questions is saying calculate the economic order quantity for the sanding machines I also want you to add the following questions so that we finish the whole topic answering this simple question. So the first one, they said you need to calculate the economic order quantity. The second question that we are adding, you need to calculate the number of orders. The third one is the ordering cost per annum. Spelling. The ordering cost for the year. Number 4 is the holding cost per annum. Right, let's just add those 4 things there. It's 3 actually. First, we need to calculate the number of orders. Then second, we have to calculate the ordering cost per year. Then lastly, we have to calculate the holding cost per annum. Right, we have that now. Good people.
Yes.
Can I at least have one person online there so that I know that I'm with people? I might disconnect and continue teaching. All right, so the first thing that we need to calculate is the economic order quantity. So when we are looking at the EOQ, we said it is the optimal level of inventory. So our EOQ, we said it is 2 multiplied by annual demand multiplied by the cost per order divided by the holding cost per unit. Everything is a square. So we are going to say it is 2 times our annual demand. We said the demand that is given is in weeks. Are we together? So it is 20 sending machines per week, and there are 50 weeks in a year. So for us to get our annual demand, we will say 20 per week multiplied by 50 weeks. So we got 1,000. So am I right? 20 by 50 is 1,000. So multiplied by 1,000, multiplied by the cost per order. So the cost per order, the cost to place an order amounts to 300. So we multiply that by 300 divided by our holding cost per unit. So our holding cost per unit is going to be the direct inventory holding cost is 35. We add insurance. They're saying your insurance is what? 10% of the unit cost. So my insurance would be 10% multiplied by my unit cost is how much? How much did I invest in inventory? So the company purchases the sending machines at 3,430. So multiplied by 3,430, multiplied by the opportunity cost. Our opportunity cost is what? Is 4%. So we multiply that by 4% of 3,430. Everything is a square root. So what I want you to do is to solve the numerator. You give me the answer. You solve the numerator. You give me the answer. Then you give me the final answer afterwards. Can we do that? Where is my calculator? Seems like I don't have. I have the numerator. People. So we have got 600,000 divided by 515.20. And our answer will be 34.13, meaning that our final answer, if we round off, how much do we get? Good people? I want us to answer this one because it will help us to answer other questions when we get into the exam. It's 34.13. So how much will be our final answer? Who can help us? Or I should choose any. All right. So our answer is going to be 35. Those who did mathematics, you know that you round, when you're rounding off, this will be 34. Are we together? But for this one, we are not going to order less than the demand that we are expecting. So when we are rounding off, we round upwards. Are we together? Even if your answer is 34.01, your approximate answer will be 35. So please take note, you round upwards. Is that clear? All right, so please take note, we should always round up as we cannot produce species with partially completed units. Are we together? So make sure that you always round up. So what does the 35? Yes, sir.
Sorry, in fact, I lost you on holding cost because of my network.
Yes.
The last part, I see the 35. I also saw the test 10%. The only part that I need clarity is that 4%.
Okay. Remember what we said about our holding costs. Your holding costs will be having your direct holding costs. You can have your insurance. You can have your opportunity cost or the cost of capital. So our direct holding cost is the cost that you incur for holding each inventory item. Then your insurance, if you insure your inventory, your insurer can say, okay, your inventory, each inventory that you are holding, we will charge you 2% for your insurance of the purchase price. Do you understand? Then the opportunity cost, we said it is the cost of taking another alternative. The entity decided to invest in inventory instead of investing in another investment. Are we together? So because they chose to invest in inventory, we are saying that the entity has lost a return from other investments that they could have invested in. So we are just going to simply say they have lost a minimum return. Are we together? Because we know that if an organization is going to invest, it should invest in an investment that is going to give it at least its cost of capital. Is that clear? Okay. Right. So when we did our calculation there, we looked at the first one was, we said our EOQ, let me just read to it, is 2 times your annual demand. Your annual demand, we said it is 1,000, if I'm not mistaken. Yes, we said it is 1,000 multiplied by the cost per order of 300. Then we divided by the holding cost. Or sometimes others, they can call it carrying costs. So my holding cost, first I'll start with my direct holding cost, which they said the direct holding cost is 35 Rand per unit. So it will be 35. We add the insurance. What did they say about the insurance? The insurance, they said it is, insurance is 10% of the unit cost. What is the unit cost? Our unit cost, they buy it at 3,430. So it will be 10% of 3,430. Then our opportunity cost, they said the cost of capital is 4%. So it will be 4% multiplied by 3,430. So everything is a square root, which will give us, Kanje, we said it is 600,000 divided by 515.2 square root. Then we got 34.13. And we said this is approximately 35. So always round up. Are we together? You always round up. Let's say the entity is manufacturing or the entity is selling cars. So if your economic order quantity is 34.13, there's no 0.13 of a car. Are we together? So round up to a finished what? To a finished product. Right. Any other question? Are you answered, sir?
Yes, thank you very much, ma'am.
All right.
I have a question. Hello.
Yes, ma'am.
With regard to rounding up, do we okay, I remember rounding up from, at least if it was 34.5, that's when we round up to 35. So if it's like this, 34.13, is it advisable to round it to 35?
Yes, that's what I'm saying now, to say, please, for economic order quantity, you cannot have a partial of a product. You are selling cars, madam. When your customers come in, they will need to find cars. So we cannot have 0.13 of a car. So if it's 0.13, let's rather say, let it be a finished product. So we round up together. Because the challenge that is going to be there, if you round off to 34, your customers will come and they don't find inventory. You lose business. Do you understand? So in this case, we don't apply mathematics rules, we apply business rules. We want to be on the safe side. So we are going to round up. If it is 0 point something, please take note. You put 1 in front. Are we together? So you round up. Right, there was another gentleman who wanted to ask there. Are we done?
It was me. Sorry, I just wanted to know, are you also sharing the notes in the group?
Yes, I did share.
No, like the ones that you're doing now.
Yes, I did. I will share them also. I will share them again. Also, okay. This video, I will share it. Don't worry.
All right,
you are going to have time to practice at your own time.
Can I please ask?
Yes, ma'am.
No, yes, just in just the 34.13. Let's say maybe it was 34.0 something. Do we still round or
round
just because it's 0, we don't?
Yes, yeah. Yes. You always round up.
Or as long as there's a point, whether it's 0 point something or 1 point something, it doesn't matter.
Yes, it doesn't matter.
Okay, thank you so much.
You round up. Right. Then the second part is, we said we need to calculate the number of orders. All right. But before we go to the number of orders, what does the 35 mean? Yeah, that is what is important. You have calculated and you said my economic order quantity is 35. But if somebody asks, okay, you've calculated your EOQ as 35, what does it mean? From what we've been explaining, good people, what does the 35 that we have calculated mean? So,
hello.
Yes, ma'am.
It means the 35 rand, it means the cost of quantity.
Okay, but it's not a cost, it is the number of units.
Number of quantity, sorry. So yeah, number.
So that's the max, basically that's the max order that you can go for.
Yes, so we are saying
optimal levels.
Yes, it is the optimal level. Remember our inventory cost, we explained it. We said it is 3 items, right? The purchase cost, it is the holding cost, and it is the ordering cost. So if we are to every year, if we are to order 35 units from our supplier, are we together? What we are simply saying is that this is the level of inventory that we are going to minimize our inventory cost. There is no any other quantity that is going to be having a better cost than 35. Do we understand? So that is our optimal level of what? Of inventory. Are we together? This is the best quantity of inventory that is going to minimize our cost. Right, another thing that we need to, I know it's fine. So the purchase cost, the holding cost, and the ordering cost. So we are done. Remember, the entity has got a demand of 1,000 units per annum. Do we agree? The demand is 1,000 units per annum. So on these 1,000, we are saying that the entity, every time, they need to order how many? 35 until they reach the 1,000. So the second part, we said we need to calculate the number of orders. So from your mathematics now, the number of orders will obviously be the demand divided by the what? The EOQ. So the number of orders will be your annual demand divided by the EOQ, or we can say the annual usage. So in this case, the entity has got a demand of 1,000 or a usage of 1,000. Every time they make an order from their supplier, they need to order how many? 35. So we divide that by 35. So the orders that are going to be there will be 1,000 divided by 35. And what do we get?
29.
I don't know.
29.
Sorry?
29.
29. There's no point.
Or 28 point, we thought we're rounding up.
Okay,
28.5.
28.5, I need, which is approximately 29 orders. Is that clear? So what it means is that the entity should order 29 times. Are we together? Right. So the third one will be the annual cost, annual ordering cost. So the annual ordering cost will be equal to the number of orders
times 200
multiplied by the cost per what? Per order. Yes. So how many orders do we have? We have got 29. We multiply that by the cost per order. The cost per order is 300. So at page, my computer failed me just before class. So we'll be using this tablet just now. So 29 times 300
8.7.
8,700. Now this one is now in rands. Right. Questions? Additions? Or subtractions?
No, I just wanted to ask, the number of weeks are we always given, or in terms when we're not given, do we use the normal weeks in a year that we know?
Yeah, sometimes you just have to use the normal weeks, but normally you'll be given the number of weeks, or you can be given the number of days, or the number of months. A month is obviously 12, né? But it depends on the question. Please take note of that. I would read the question first, then apply your general knowledge after you've exhausted the information that has been given on the question. Are we together? So to be on the safe side, read the whole question and find nothing to the examiner that is going to use to say, here you did not use this. Are we together? All right, then number 4. So the fourth thing that we want to look at is, Kanje, we said, is what? The holding cost per annum. Right. Is this the correct spelling? Yeah. Right. Let me put here. Right. So the holding cost per year, good people, it is the cost of holding these, the inventory that will be there in the warehouse every time. So the holding cost per year, good people, is, let's write down the formula, is your safety stock plus your EOQ divided by 2 multiplied by the holding cost per unit. Is that clear? So what would ask? Yes, sir.
I was saying, since we do have holding cost per unit, right? And then we do have number of units. Why don't we just multiply the 2 and and multiply everything by 12? Okay, sorry. We do have the EOQ, right? We do have the holding cost per unit. If we change that, multiply by each other,
right,
and have a number and multiply by the number of weeks.
All right. No, let me just, yeah, I'm getting your question. Let me just try to explain it. Now, the first thing that we put on our formula is the safety stock. Now, the safety stock is your buffer stock, or is the stock that you are going to keep in case of you get a higher demand than you anticipated. Do you understand? So we don't want a situation whereby the customers come in our shop and they find that the inventory is not there. So for the entity now to be on the safe side, they are going to have what they call safety stock. So safety stock is buffer stock. So safety stock, we are saying that the entity is going to be holding that inventory every time. Do we all understand that? So that's our safety stock. So safety stock is inventory that is always there in case of emergency. So if our customers have been demanding to buy 20 units per week, are we together? But now someone can come and order more than what is there in stock. So if they order more than what is there in stocks, like somebody comes and order 45, now we always order 35. That is what we have in stock. So it means that we are going to lose business because the customer is going to go elsewhere. where there is a stock. Right. So another thing that we have now is the economic order quantity, which is divided by 2. Do you see that our EOQ, we divided it by what? By 2. One would ask, why are you dividing the economic order quantity by 2? Who can answer us there? If we analyze it, we are dividing it by 2. I think it would be easy for you in the examination to see what is happening when you understand the formula in full. So EOQ, we are dividing it by 2. Why? Yeah, the people there. Oh, back on. Okay, they're just ignoring me. All right. Yes.
Isn't it because you said we already have that safety stock, so it will be adding on top of that the safety stock, so we don't want to end up having a lot of inventory on our hands. I think that could be why we are dividing it by 2. Yes, no?
Okay, so remember what we are trying to do is to find the cost of the inventory that we are holding altogether. So please take note, the economic order quantity, if we order 35 units, let's say we are ordering every month, okay, like here, we are ordering 29 times. Before the next order, we are not going to be holding 35 units every time. Do you agree? Because when you order, a customer is going to come and buy inventory. Altogether, our inventory is always what? Reducing. So the reason why they will say the economic order quantity is divided by 2 is so that we can calculate the what? The average inventory. Is that clear? We are just dividing it by 2 so that we get the what? The average. That's why we are dividing it by 2. Safety stock was not divided. Why? Because the safety stock is always there. Are we together? But the EOQ is going to be diminishing every time because the customers are going to come in and buying the what? The inventory. That is the reason why we are dividing it by 2. Then we multiply it by the holding cost per unit. So from our question, our safety stock, it was not given. Was it there? They didn't give us, ne? So we don't have to worry. It's 0. Plus our EOQ is equal to EOQ, can you say 35 divided by 2 multiplied by the holding cost per unit. We did calculate our holding cost per unit. It is 515.20, which was 35 plus 10% plus 4%. Are we still together? All right, so it will be 515.20. Together. So our inventory holding cost will be 17.5 multiplied by 515.20. The answer.
9,016 rand.
9,016
rand.
Like this.
Yes.
All right. Questions, additions, subtractions?
All right. Baby.
So the safety stock they should always give us, so we cannot calculate it for ourselves.
You can calculate it. You can calculate it. Depends with the English. Let's do this.
How do we calculate it?
Right, I will show you how to calculate it. I think there is a question that will help us to calculate the safety stock.
Okay,
Right,
thank you.
any questions, additions, or subtractions on this one?
Is the holding cost per or
Now remember, the holding cost is the holding cost per unit. Nah, it is the holding cost per unit. Right. Right, let's go to a question. Now, this is basically what you were doing in MAC 3601. Very simple stuff. Remember, your module is an application. So it means that we need to apply the information that we are given so that we can make decisions. Now, you will find out that an organization like this one has been ordering 35 units. Then another supplier can come and say, remember they were purchasing the inventory at 3,420. Another supplier can come and say, guys, if you order 40 units, we are going to sell the inventory to you guys for 3,000 Rand. So when you are looking at it, you are simply saying the organization is going to what? To save if they order 40 units. But as a management accounting student, you know that the inventory cost is not only the purchasing cost, because if we order more units, it means that we are increasing the number of what? Of units that we are going to be holding. Therefore, we are increasing the holding cost. You understand? You might have saved on purchasing cost, but you have increased the what? The holding cost. So what you do now as a management accountant, you are going to say, my inventory cost has got these three items there. Number one, it has got the purchase cost. Number two, it has got the holding cost. Number three, it has got the ordering cost. So when I look at my question now, I will say these three items, if I add them together, which one is going to give me the lowest cost? So I will take that one. Do we understand that part? I've calculated my EOQ, but somebody is saying, don't apply the EOQ, order this number of units. I will sell you at a cheaper price than what you are currently purchasing. So what you do now, you're going to say, okay, my current order versus the proposed order, I add all of them. I see which one has got the best cost between the two. Is that clear? So we want to do an application. So that question that you were asking to say, how do we calculate the safety stock together? We are going to see how to do it. And also there's another one that is called the reorder point. Right. Question 1.4. Let's go to 1.4. Yes, sir.
Just one last one.
Yeah.
Normally, I think what I've realized with management accounting is the fact that they either hide information or they give you more than required. You know, so, just to confuse you, we end up adding stuff that we're not supposed to be adding. For example, they will give you the salaries, they will give you rental, something that is irrelevant to the question. If, for example, they add a rental of the warehouse, is that part of the whole rental of the warehouse, which there's another items or there's another activity that is happening, but yet we know for a fact that that stock is being held in the warehouse. Is that part of the holding cost?
Yeah, so now the question that you need to ask yourself is to say, my inventory holding cost is the direct inventory, is the direct cost altogether. So a direct cost, now we come back to MAC 2601 and we say a direct cost is a cost that changes because of the level of activity altogether. So a direct cost will never be the same. It will change with the level of what? Of activity. So for example, if your direct cost is 2 rand per unit, if you have 3 units, it is going to increase. If you have 4 units, it is going to increase. But if you see that your cost is not increasing because of the level of activity, that cost is not relevant for this case because we are looking at the direct holding cost. So that is the reason why I gave you how the steps that you need to follow to say, okay, if I'm calculating my EOQ to annual demand, I have to multiply by I have to make sure that I have the demand per year together times the cost per order divided by the holding cost, and the holding cost, which ones are there? Direct holding cost. A direct holding cost which is going to increase with the level of activity. Does my rent increase with the level of activity? You ask yourself. Now for rent, most of the time it is a fixed cost. Whether you store 100,000 or 50,000, your cost does not what? It does not change. So therefore it is not relevant. You understand? So it means that you go back to your basics. You see with this one again. All right. So the information that is given, remember you are now third-year students. If you qualify with your degree or your diploma, it means that you need to be making a decision for an organization. So what you are given in the organization is information not to confuse you, but you need to be able to make a decision. So also UNISA, when they are giving you a question, they are not trying to confuse you. They are trying to see whether you will be able to make the correct decision when you are faced with one. Are we together? Right. So let's go to question 1.4. Mbali Skins is a wholesaler of laptop covers. The company sells approximately 1,500 of these laptop covers per month. You see now this time it is per month. Are we together? Sales take place even throughout the year, which consists of 300 working days. Now, the company currently purchases the laptop covers at a cost of 350 Rand each. Orders are executed within 5 days, which we said it is our what? Our lead time. Safety stock, now, take note, madam. Safety stock should amount to the sales requirement for 3 working days. So our safety stock, we are saying that if the entity is holding a safety stock, it is a demand for at least 3 days. There is no fluctuation in the department for laptop covers. According to estimate, the cost to place an order amounts to 150. Now, direct inventory holding costs amount to 10 Rand 50, and insurance is 7% of the unit cost per year. Now, the company has been approached by another supplier. So another supplier has approached them, offering a price of 330. Before they were purchasing it, how much there? At 350. Now, provided that the orders are placed in batches of at least 500. So the company is saying, if you order 500 every time, we will sell at 330. Now, the lead time for the delivery will remain as 5 days. The ordering cost per order for this supplier is 120 per order required. Determine the number of orders to be placed annually without taking the special offer into account. Now, please, can you calculate the number of orders? I'm giving you 3 minutes. Number of orders, good people. Number of orders. Don't look at the bottom part. So the number of orders, you can get it here. And don't forget your formula. Did we get that? Good people? All right.
Yes.
Yeah, 12:45, you should be having the number of orders. Thank you. Just go back to your formulas apply them. Then you'll be sharp. Sharp, sharp. Right. You should be done. What are we getting as our answer then? People? But one team.
I got the number of orders as 30.
We got 30. Anyone with a different answer? No one. Okay. Let's just see if we are sharp. Did you got 30?
I got 46.
You got 46.
Yes.
Okay. I'm answering that. We rather do it together. All right. So remember, what was the formula for the number of orders, Ganj?
Calculate the
annual demand.
Annual demand.
Was annual demand, eh?
Yes, divided by
annual
the EOQ.
usage divided by the EOQ.
Yes.
So let's start with the annual usage. So if you've written down your formula, annual usage, let's go back. Annual usage, they are saying our usage is 1.5 of these per month. So they did not give us how many months are there in a year, but we know from our general knowledge what I meant there. To say it depends. If they gave you, you use what you are given. If they didn't, you use your knowledge. Are we together? So it is 1,500 of these laptop covers per month. Are we together? How many months do we have in a year? We have got 12. So we are saying our annual usage will be 12 multiplied by 1.5. What do we get?
18,000.
Right. So we have got an annual usage of 18,000 units. Then the next thing is to calculate the what? The economic order quantity. So which is 2 times annual demand is 18,000 times the cost per order. How much is the cost per order?
150.
It is 150 divided by the holding cost per unit. The holding cost, they said the inventory holding cost is 10.50 per unit, plus the insurance is 7% of what?
350.
Of the unit cost. How much is the cost? Is 350. So we are not given the opportunity cost or the cost of capital, so we don't have to force AICO. All right, so our EOQ, good people, give me the numerator and the denominator differently. How much is our EOQ?
392.79.
I need the answer one by one.
Oh.
The numerator?
It's 5,400,000.
Yes, divided by
35.
Divided by 35. Right, I'm doing this so that when we are now going to be calculating the holding costs, whatever there, it will be easy to understand. We don't have to recalculate it again. I hope you follow. Right, so then you get that 392.79 is approximately 393. Right, so we have everything now, if you check now. We now have our annual usage. We said it is 18,000. Our EOQ is 393. So 18,000 divided by 393 will give us a 45.6 point what? Yeah, 45.8, which is approximately 46 orders. Do we follow? Good people?
Yes.
All right.
Yes, we do.
All right, so then part B, determine the reorder point. Okay, can I do the reorder point after C? Now, recommend to Mbali whether or not the special order should be accepted. Support your recommendations with appropriate calculations. Right, so we can see now, good people, Uguti, a special supplier came to them and he said that they want to offer them at 330 if they order 500 units. Currently, the entity is applying the economic order quantity, and we saw that their EOQ is what? 393. So these guys, they want us to order more units from them, each order. So it means that it might reduce our purchasing price, reduce our number of orders, but it will increase our what? Our holding cost. So what we do now is to apply what we know on the inventory cost. Our inventory cost, good people, we said it is the purchasing cost, it is the holding cost, it is the ordering cost. When we add all these, we need to make sure that our cost is minimum. So what we can do now is to do this. What we can do is to compare the two methods. We have got two methods or two options. Currently, we are treating it EOQ. Then we also have the what? The special offer. Are we together? So we now have two options. You are now making a decision. You are now a management accountant, good people. You now need to make a decision. We want to see whether is it okay to take this offer or to continue with the offer that we currently have. So the cost that we have got the purchasing cost. Let's start with the purchase cost. Right, so we start with the purchase cost. Under the economic order quantity, our annual demand doesn't change. Our demand is still what? Kanje, you said the demand is what?
18,000.
Right, our demand, let me rather put my page here. Okay. The wrong page. All right. So we have got the special offer, the EOQ. Right. So our purchase cost, our demand is 1,500 times 12. You said it's 18,000, eh? Right, so if we are applying the economic order quantity, that is our current, it would be 18,000 multiplied by the cost to buy each cover is 350. So we multiply it by 350. What is our cost? 18,000 by 350.
6,300,000.
6,300,000. Now, if we apply the special, it would be 18,000. These guys, they said they will sell it to us for how much there? They will sell it for what? For 330. Do we see that? They will sell it for 330. So we multiply that by 330. So it will be 18,000 times 330.
5,940,000.
5,940,000. So what it means is that the entity has served in purchasing cost, but it's not the only cost. We also have the what? The holding cost. Remember what we said about the holding cost? Our holding cost, we said it is the safety stock plus EOQ over 2 times the cost per order. Cost per unit rather. Holding cost per unit. All right. So let's start with our safety stock. Were we given the safety stock?
Yeah, there was an information here.
Okay. What was the information saying about the safety stock?
Safety stock should amount to the sales requirement for 3 days, 3 working days.
3 working days. Where is that? Okay. Safety stock should amount to the sales requirement for 3 working days. Tina, what we were given is the demand per month and the number of days that are there in a year. So for us to get our daily demand, are we together? So our daily demand in this case will be 1.5 times 12, which we said it is how much there? 18,000 divided by 300 days in a year, because they said there are 300 days in a year. So it is going to be 18,000 divided by 300. So meaning that the demand per day is 60. So our safety stock will be equal to 60 multiplied by what? By 3, which gives us what? 180. Do we follow how we calculate our safety stock? So, yeah. Right, so we can say 180 plus our economic order quantity. We said our economic order quantity is 300 and what? And 93 divided by 2 multiplied by the holding cost. Holding cost per unit is 35. Then you get your answer. How much are we getting? 393.
131,000.
131,000.
776. I'm not sure if I did it correctly.
Plus what?
13,177.
Oh, sorry, yeah, 13,000. 13,177.
All right, 13,177.50. Do you understand? We now have our holding cost. Now, this is for the EOQ. But for the special, remember, they said you should order how many there? 500.
100 units.
Yeah, are we together? and the safety stock is going to be the same. Are we together? So did they tell us about the safety stock?
Only the lead time.
Okay, all right. So we can come and we say our safety stock is still 180. Our economic order quantity, it has changed. It's now what? 500.
100.
Divided by what? By 2. Multiplied by the holding cost per unit. Now, here, you need to be very much careful at one team. You need to be careful. Our holding cost is no longer going to be the same. Why? Because they said insurance is 7% of the inventory cost. Before, the inventory cost was 350. Now our inventory cost is how much there? It's 330. Do you see the catch now in the examination? You come out celebrating the Annum shine. I mean, you see up, you wonder, what did I do? You understand? So you see, now our holding costs have changed because the question is telling you that insurance is 7% of the unit cost. What is our unit cost? Our unit cost is now 330. So I can easily come and calculate now my new holding cost will be 10.50 plus 7% of 330.
3360.
So it will be 0.07 times 330 plus 10.5. How much are you getting?
33.60.
33.60.
Which is 34.
These are rands, 33.60. This is in rands, ne? Right, so it will be 250 plus 180 times 33.60. So it will be 14,048. So you can see we have saved in purchasing, but we have increased in what? In holding cost. Are we together? Then we come to the last one, which is the ordering cost. The ordering cost, it is the number of what? Of orders multiplied by the cost per order. The number of orders we did calculate for the EOQ, it was what? It was 46, ne? Yes.
Yes.
It is 46. So we will come and we say 46 multiplied by the cost per order. Cost per order. What is the cost per order? Is 150. So 46 by 150?
6.9.
6.9.
6,900.
Yes.
Yes.
Okay. Right, under the special. The special, remember, our number of orders will be how many now? Our number of orders will be, remember, our annual demand is 18. Now they are ordering 500 units. So it will be 18,000 divided by 500, which gives us 36 orders.
Yeah.
So it will be 36 multiplied by, did the ordering cost change?
Yes, to 120.
The ordering cost is now going to be 120. So we'll come and we put 36 times 120. So you see, MAC, just read the question, you apply the deal. 36 times 120, 4,320.
4,320.
Right. You understand? For 320. Right, is there anything else that is going to be added? Anything else? The company has been approached, the lead time, the delivery, the ordering cost is only so pretty. So now we can easily come and we add everything now. We are adding everything.
Vale.
What is our total? Good people?
6 million. Okay.
The first one is 6,320,000. Yeah.
Good, why are you counting like former president now?
Former president. It's 6,300,000. Yo, I cannot. 77.
Right, so
6,320,000
and 77
77.50.
rand and
Yes.
50 cents.
Hey.
All right. Step up.
Zoom.
So it would be 6,320
077.50.
0.50. Then let's do the other one.
5 million. 5,958,768.
Right. Are we together? So you now have the cost for both scenarios there. You now have the cost for both scenarios. Then you come and you put your what? Your conclusion. Because that's what the examiner wants. Ne? Recommend. What is your recommendation? So you can say conclusion or recommendation. What should the entity do from what you have calculated?
I think the special.
It's the deal.
5 minutes. 10.
After 10.
Whichever that has the lowest cost.
Whichever.
Go for it.
Yes. Do we see that? Yes. So you need to make a conclusion. So the entity should take the what? Take
special offer.
Special offer. Why? As it will reduce the inventory cost by, you need to say, how much is it going to save by? The difference between the two, what is it? 6,320, 077.50 minus
361,309.50.
350 like this.
309.50.
309.50. The time. Are we happy? Questions? Additions? Subtractions? Yes, sir.
I just wanted to check. Let's just say I get a different answer, right? Maybe
yes.
It's the inverse of the picture that I'm seeing. Maybe according to my calculations, the special is worse than the initial proposal, and then
yes.
I still write a conclusion based on my
yes.
observation. Will the examiner still mark me right
Right.
based on...
Let's look at how the examiner is going to mark your answer. Ne? Number one, the examiner is going to check your purchasing cost, give you a mark if you got it right. Come and check your holding cost. Maybe you lost. He will give you what you got from this part. Ne? Maybe instead of getting 5, you get maybe 3 marks. But you put something. Always put something on it. Then you come to the ordering cost. You get everything. So it means that the answer is going to be different from what the examiner is having. But remember, what is important is that you need to give a what? A conclusion. And the conclusion that you are going to give the examiner is that they are going to take the lowest altogether. So the lowest in this case is the special altogether. So you lose marks on top, but definitely on the conclusion, if you were writing something, you will get your full marks. So don't leave anything blank because you will use it to get marks in the next thing. Somebody can be lost, holding cost you don't know, you just put a figure there. You come and you add everything. It's fine. You come and do your conclusion. You know your conclusion is that I need to save the inventory cost. You're done. Are we together? Okay, thanks. All right. Right, then we come to the last part. So A, we are done. A is done. And the C. Now the last one is called determine the reorder point. That's the last thing. Now, reorder point. Now, the reorder point is the point where we are going to order our inventory so that when the supplier is bringing the inventory to us, we don't run out of what? Out of inventory. Remember, what we need to make sure is that when our customers come in, they find something. So if we know that the lead time or the time between ordering and receiving the goods is 5 days, we need to make a provision for those 5 days. Do we understand? So our reorder point, we are saying is equal to the safety stock plus the demand or usage during lead time. Is that clear? It is the safety stock plus the demand during the lead time. So what is our safety stock? Our safety stock, we did calculate. Remember the order per day, we did calculate, we said it's what? It's 60, ne? Was it 60? Yes. Or just do it again. It was 18,000 divided by 300, which was 60 per day. So our safety stock was 60 times 3, which is 180, plus the demand during the lead time. What is our lead time? Orders are executed within 5 days. So it will be 5 times 60 altogether. So it will be 180 plus 300, which was 480. 480. Thank you. Questions, additions, or subtractions?
No, I just wanted to ask, though my question is not related to the reorder point. I'm just a little bit confused with the first and the second question. The second question, they said monthly, the order monthly, and then you said we must use logic, which is 12 months. Yes. And then the first question, it said 50 weeks. They wrote 50 weeks, but they said weekly, but we didn't use our general knowledge. Why on the first question did we use what we were given, where else on the second question we didn't use the 300 days, we used our general knowledge of 12 months. I just want clarity on that, because to me, I feel like the two scenarios are the same. Both amounts of time that are given are lesser than what we normally know. Instead of 52, they gave us 50 weeks. And on the other side, instead of 365 days, they gave us 300 days. So yeah, it's giving me a little bit of confusion.
All right. So one thing to take note of, ne?
Okay.
Apply what the examiner has given you. Are we together? If you use your general knowledge on a question that the examiner has actually told you, Uguti, they are 50 weeks, and when you use 52, the answer will be wrong. The entity is trading for 50 weeks. It is not trading for 52. There's a reason for that. They might not have been, maybe they could be holidays, or they could be weeks that they are not working. So apply 50 weeks. You understand? But in terms of months, it's not a problem because we know that there are 12 months. And we were not given the number of what? Of months in this question. So that's when you apply your general knowledge. Are we together? To say, okay, we have been given the demand per month, and the months in a year are not given. So what should I do? I know that there are 12 months. I multiply that to get my annual demand. So these are the total number of units that are demanded in a year. And I've been given the number of days in a year. So I'll just divide by the number of days, which is 300. We know that is 356, but the examiner told you that please use 300 days. Are we together? Yeah. So,
okay.
Right. Your homework.
Sorry, sir.
Yes, sir.
Can I just ask you to please give us just a description of the reorder, not the calculation itself. So is the point where something is
right. So when we are looking at the reorder point, so we have been given the lead time. We know that our lead time is 5 days. So we are saying that we need to make sure that we don't run out of stock. Is that clear? We don't want to run out of what? Out of stock. So if we order our inventory, we need to make sure that the time that we have ordered and the time that we receive the goods, we have made a provision for that. So the reorder point, we are simply saying it is the point whereby we are going to order inventory to avoid running out of what? Of stock. So we know that the demand per day is 60 and our lead time is 5 days. It means that if we are left with only 300 units in our warehouse, we know that we need to order our inventory to avoid running out of what? Out of stock. But please don't forget to say the safety stock should always be what? Be there. So that's why we are saying 300 plus 180, which gives you 480. If we reach 480, we need to reorder to make sure that we don't run out of stock. So this is whereby you reorder, you order again from your supplier, because you know that if I order, I take 5 days. So make a provision for those 5 days I would get. Right, so this is where we end. Now, we are going to do a revision for this topic, past examination questions. And also this video, I'm going to share it on the group. So I'll maybe take 2 or 3 questions from past examination papers that you are going to apply. Then also on your assignment number 1, there are questions on the economic order quantity that you need to look at. We'll discuss them. No, those who will come back, we'll discuss them in class. This was just a free class, just to know me. So if you need help in future, if you don't have money to attend classes with us, maybe one day you might need maybe a revision class, you need maybe help with a question that is troubling you, you can just call me, I will help you. So on the group, I'm going to send the registration forms and our timetable. So normally our classes are provided online on Zoom. We have stopped the face-to-face classes. We have seen that we can reach out to more people when using Zoom. So please make sure that you have your Zoom application, then you can attend. So our fees are 1,500 per module, which you can break maybe into 3 months. You pay 500, 500, 500. For those that are doing year modules, it's 3,000 because you're doing two modules at the same time, and you'll be attending from January to October. But semester is just 1.5. So I will share the registration form and our timetable. We have got midweek and weekend classes, but still our classes are recorded. We will share them on the group. So I'll create a group when we have people, then we'll be attending. So I'll share the timetable and the registration form. If you're not on WhatsApp, just send me an email, then I'll send you everything. If you're interested, you fill in the form and the deposit, then we can kiss that going forward. But this video is free. It will be shared on the group. You can use it at your own convenience. Any questions? Additions?
I see there's somebody who asked a question on the chat of how much is the revision class, because she has sub on the 28th.
The revision class now, normally our revision class is 350. Yes. So if you have a sub on the 28th, what you can do, call me. I will give you recorded classes. We have recorded in the past. All these years we've been recording. So I can give you our recordings for 350. And if you have a certain topic that is troubling you, I can also give you that recording for you to just look at. But past papers, the revision will be just doing revision and we charge 350. But just call me on 0788565885, or you can just send an email at oxfordtutorials.net. Right, so you can just catch us there. So if you're interested, I will send the registration form and our timetable. Then you can attend full-time accounting. So those that are doing FAC 3701, I'm sorry I took longer. You can jump into that class. You get more notifications there. Right, I see there's a hand raised there. Oh, I don't know how to do this. Kanje, who sent a message? How do I even check? I'm used to, where are the messages?
Can I ask a question perhaps while you look for messages?
Sorry?
Can you hear me?
Yes, I can hear you.
Yeah, thanks. So thanks for this class, this free class. Really appreciate it. It gives us, at least me, an overview of what to expect in these classes. But just a question on the fact that you're actually covering both the year module as well as the semester
yes.
At the same time. How are you going to, while looking at the exams that are coming up in May, how are you going to fast track those that are actually attending for 3701 versus the ones that are actually attending for the year?
Okay, so for our structure is like we are teaching the semester module. So May, June, you are done with the whole syllabus, which gives an advantage to a person who is doing the year modules because you're going to finish your syllabus in June. July up to December, up to October, November, you're just revising. So you see second semester, those that are doing the year modules will not be part of the semester guys. They will just be having their own class where they are just doing past examination papers only. So for the semester guys, you are covered. We are finishing your syllabus before you write. Then for the year guys, you are finishing your syllabus in May, June. Then after that, you are going to be revising. If let's say you were slow or there's a topic that you have forgotten, you can also attend with the MAC3701. So when you create the group, we don't create the group for 3701 and 3761 together. We separate them because also their assignments are different. You will see that the assignment for 3701 is mixed with, for 3761 is mixed with the financial management. So that's the thing. So you can just, yes. So Umachan, you can just shoot.
Oh, hello, Kumani. I wanted to ask if the lessons are going to be aligned to the study plan as per the tutorial letter that we received for 3701.
Now, what we do now, the study plan, the problem with it now is that it might say do topic 1, do topic 3, do topic 2, 3, 4, 5, which might be a problem because certain topics are not interlinked. So with us now, we know that if I move from this topic to that one, people can easily follow because they won't forget the principles that they were doing previously. You understand? Then the study plan for UNISA, you can just use it. And mostly myself, I would want to first cover the topics that are on your first assignment so that you are able to do it on your own. You get stuck, you ask me, or we even discuss it in class. It's not a problem. So we prefer to do the topics for assignment 1, we finish them to make sure that when the assignment is due, you are able or you understand it instead of just buying the solutions. You know what to do. Are we together? All right. So if there is, in the absence of any more questions.
And sorry, if I may just ask a last question.
Yes.
I know you're going to share the timetable and stuff, but just maybe upfront. Your classes, are they often held, especially during the week? Are you having them in the evening?
Yes, during the week, our classes start from 7 o'clock until 9 o'clock. Then weekend, you will see the timetable. We have weekly classes, it's after hours. Then weekend is during the day.
All right.
Yeah, but I will share the timetable and they will see. And there are some, of course, who will not be able to attend, but they will be wanting to follow what others were doing. So everything will be shared. Like this class, I will record it and post it on the group. Yeah. All right. So, sharp, good people.
Sorry, but please kindly share the link for accounting on the group.
Okay, the link for accounting, please follow the link for accounting. You'll get it there. Yeah. It's there.
Oh, where are we going to get it?
The link for financial accounting.
Yes.
If you received an SMS, you'll get, okay, let me just do this. Let me do this, copy. I've shared it on the link for MAC3701. Are we together? All right. Then I'll just simply say,
Okay, just quickly, there are accounting and MAC the only two subjects that you offer tutorials for?
No, we do. We do offer all of them. If you're doing accounting sciences, auditing, tax, everything. But just today, we just selected a few modules.
Okay.
Yeah.
For the next one, it's financial accounting.
Yes, financial. You should be in class now. Say, let me just send you. All right. Yeah, I've shared it on the group. Financial accounting, I think they've started.
Sure.
I'm sorry. I took long.
Okay.
All right.
You also have a free trial for tax 3701.
We will see during the week if we are up. Yeah, but what we can do, you can just send me an SMS to say, can I have a class for 3761 or 3701 or 3702? Then I can send you a video if we are not going to invite people.
Oh, okay.
Yeah. Sharp. All right, good people. Sharp.
Right, thank you.
Thanks much, bye.
Thank you very much.
Thank you.
Thank you.
Yeah.